All right, good evening, everybody. Let's see, the market closed here Tuesday, the 27th, and the market was down quite a bit actually today. Had some really good trades to the short side today, day trading wise. Let's take a look at the. See, the market was down about 183 points today. Let's look at the SSO, and we'll look at the S&Ps. But the SSO, look at this. Now, this is what I like to call, this is an outside day, right, where the high takes out the prior day's high and the low takes out the prior day's low and closes in the bottom third. I mean, that's very bearish, right? Now, look, the market rallied quite a bit. I mean, that's a huge rally off this 200 moving average right down in here, right? And if you go a step further, and let's see, let's do the fibs. Okay, Fibonacci retracement. I'm going to draw the fibs from this high, the highest high that the SSO has ever seen, down to this low. Okay? Now, there's no doubt, the market rallied definitely more than I had thought. I didn't think it would go straight up to almost a 78% retracement. I mean, we blew up through the 38. Right? Had a little resistance there, created a little inside bar there, and then broke back up, and then immediately back up through the 50%, and then, as you can see, we saw some resistance at the 60% retracement, came back down, and then right back up again. So now we've seen this reversal. So what I did today, near the first half hour, I started buying puts, okay? April puts on the SPY actually, so making some money there. So I'm looking for, I mean, again, I was completely and 100% wrong on this call, what, 3-4 days ago, right? We had an outside bar there, right? I mean, we opened up near below the 50% retracement of the day, rallied up, and then closed at the low of that day. And I said I thought we were going to move lower, right? And we didn't. We bounced right back up through that 61 and almost to that 76% retracement here. And again, a big reversal bar outside, a bearish candle that is also outside. So that's very bearish. So look at, if you buy puts anywhere in here, and again, I wouldn't be buying them here near the lows. If we're able to get some type of rally tomorrow, I would suggest buying puts. And if the market, either tomorrow or the next day or whenever, takes out the high that we saw here on the 27th, the high of the SSO 118.16, or if you're looking at the E-minis, it doesn't really matter. You're going to get the same. Your stop would be placed above the high, because if the market starts taking out this high, the high that we saw today, you don't want to be there in puts anymore, because I would not doubt that the market would continue to rally to try to retest the all-time high. I mean, that's a possibility. So again, anything that any puts that you buy, looking for a bigger downdraft, the stop has to be above today's high, right? The 27th high. So whether that be, so you got continuous chart, the day chart. The SPY, same thing, closed on the low of the day. The Russell 2000, again, took it out, the low out even more. The Dow Jones barely took out the low, so it barely took out the high of Monday and barely took out the low, closing near the low. And the NQs, the NASDAQ. Okay, one chart I haven't been able to pull up on a daily in a while, right? But look at this. I didn't realize how close we're actually to the all-time high in the NASDAQ, whereas we're way off the high in the general S&P 500 or the Dow, way off it. Okay, NASDAQ near that high with a reversal pattern. So again, the big trade I put on today, and I would advise, again, up to you, if we see some type of rally tomorrow, back up inside the range of today. So again, you could take your fibs. Now, this is what you could do, right? You could draw from high to low, right? So we closed pretty much on the low of the day. Right, 114.31 in the SSO. The low of the day was 114.31, close at 114.33. 2 pennies up off the low. So if you take a look here, we measured from high of Tuesday to low of Tuesday. The 38.2% retracement of that move would be a move back up to 115.84. A 50% retracement of this big down bar that we saw on Tuesday, right? That would take you back up to 116.30, and of course the 61.8% retracement takes you back up to 116.76. So if we get any type of rally, I buy puts with the stop above the high, looking for a bigger move to the downside. Again, maybe wrong, but trading's all about probability, and the probabilities, I believe, favor that we come back down and try to come close at least to this low down in here, as opposed first before taking out this high. But again, the market's been extremely bullish the last 9 years, and again, so we'll see. So let's take a look at, what am I looking at here? AIMT. I ran a scan. We've got an inside bar between the 100-day simple moving average and the 200. Take a look at the RSI quick, the 2-bar RSI. You got trough number 1, trough number 2. Trough number 2 is higher than trough number 1. And during that time of the creation of these troughs, we were making lower lows in price. Lower lows in price, higher troughs. I would expect the market to bounce. But since we created an inside pattern, I would use this opportunity since the overall market. Now again, this market, let's look at an intraday chart. Now the overall market was down, right? Let's take a look at the S&Ps, okay? So this is the S&P, right? Opened up right in here. Right there, 933. Consolidated, nailed the gray action zone, bounced up beautifully as expected. And then look at this, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 consecutive lower highs and lower lows. See that? 1, 2, 3, 4, 5, 6, 7, 8, 9, and I mean 10 consecutive lower highs and lower lows. Broke down through the initial range low right here on this bar. So once that happened, really, I mean, that was the point in which you said, okay, now I'm only looking for shorts. Okay, I'm only looking for shorts. So when the market came down, hit this little low near that 200 and bounced up right in here, what do you suppose we were looking to do in here? Now take a look at this circle in combination with the 2-bar RSI over 90. That's a sell, isn't it? Beautiful trade setup. Came down, took out the lows. We wanted to see a penetration down through the 200. We got it right in here, right? And so look at that. Nice rally up. Guess where this was? Okay? Guess where that was? That was, look at this. Look at the 50% retracement we measured from high of the day to the low of the day. Look at the 50% retracement. 50% retracement was actually right here on the nose. That's the 50% retracement, folks. And look at what happened here. Got overbought here. But then, look at this. As we're making slightly higher highs in here, lower peaks. Bearish divergence. And look at that. Boom. Right back down again. So this is the type of stuff you're looking for. All right. So go back to the dailies. Again, what is that symbol? AIMT. We'll put that here. AIM, and I know I'm rambling and I apologize. AIMT, if we are able to take out the high of that inside bar at 31.96 to 32.06, we'd be looking to buy. Buy calls, I would buy calls at least a month and a half out. I'd probably go to March, April, go May. May calls, in the money. Market starts taking out the lows, you would just exit that call. Okay, and you'd look for the market to rally up at least 50%. All right, have a great one. Bye for now.